Hey everybody, welcome to Trading Capital's daily analysis video. I'm your head market analyst here. Jumping into the charts on this February 15th. So yet again, another positive day for the markets. This time the Russell was actually the big winning indice, up over 1%. The NASDAQ was up next 0.77%, and then the SPY was up just 0.32%. Now you can see here on the daily chart that it does look to be that the SPY is putting in bullish consolidation. So we're going to have to respect that. Now, you still are trading under our massive key COVID trend lines of resistance, but you're slowly starting to grind up. And it would be very interesting to see how long we can keep grinding, because this trend line of resistance isn't upsloping. So therefore, the longer it continues, the higher you can go in this pattern. And it does almost make it look like the SPY wants to at least touch the top end of this range or make another little charge for it. Now, a few things we have to keep in mind with this price action and what is transpiring. First of all, today on the S&P, the SPY, we traded on volume, extremely light volume. It was 61.3 million shares. That is no conviction in buying or selling. So therefore, the float does continue the upside bias just due to light volume nature. Now, a couple things that we need to look for is this trend line over here. Basically, that's going to be your near-term resistance. If you can close and confirm above that, then you likely head to the top of this yellow trend line, which is your COVID trend, or even probably the upper end of this 425. Maybe it coincides with this pivot. So this is the level that I'm watching, this downsloping trend line. And again, as long as the volume remains light, you do favor a continuation float. A couple of the things that we're going to bring to your attention, though, is the DXY. Stocks completely ignored the DXY. Let me just actually clean up this chart here. So the DXY, we all know that the DXY had its little breakout from this downsloping wedge pattern, and you actually confirmed and closed above, and you've been putting in this beautiful consolidation inside of your initial 3-bar surge green bar. You've tried on a couple attempts to lose that momentum, but today you actually are closing at the high end of your chart. And notice if I throw on the 50 daily moving average, you actually now closed above the 50 daily moving average. Notice how it was resistance in basically most of these daily sessions over here. And then today you finally got a close above it. And the importance of this close is on an hourly chart, we actually made a closing high above this area here. So you can see that we actually got a positive hourly close above that pivot high intraday. Now, we didn't confirm, but it likely means that we're going to see potentially another retest of this upper range tomorrow. And if the dollar can hold that range, then we have a clear bull flag breakout. And I do think that that's when we see stocks adjust. Now, with options X occurring at the end of the week on Friday, there's obviously a lot of manipulation and game playing that could be played in the markets. But nonetheless, you have to recognize that this is bullish for the overall Dixie currency. If we take a look at the 2-year yield, basically the 2-year yield was it was positive today, but it did put in maybe this potential little reversal, but it's still eking out a small gain on the session. It's kind of digesting this move. The interesting thing wasn't in the short ends of the curve. It was actually in the longer end, which is why it was interesting to see the markets continue positive, almost like they're defying and breaking from this correlation and not listening to the bond market. And typically the bond market is right most times, so I do think we're going to see that correlation of stocks really diverge in and fall in the near term. Maybe it has to be after next week or this Friday after options X, but perhaps we see a late day flush. But the way that long end yields are now breaking out, confirming to the upside here on the 10-year, you also have the same scenario on the 20-year. So these are the rates that start affecting the beloved real estate market once again. And it'll be interesting to see. You'll have some near-term resistance on the 20-year when you tag this orange trend line, but it's likely that you now push up above the 4% level. And stocks really haven't adjusted to it. The yields, whereas if you look at the leader of this rally, gold led this bull market rally up, and now it's falling first. So gold is really showing basically signs of weakness, and just it's an interesting price action in gold, because we certainly have to be aware of what this macroeconomic leading indicator is telling us. And frankly, gold is believing the dollar breakout. You can actually see gold put in its bearish consolidation here, and it's now triggered and broke that, and you've now closed on a daily close. When you look at the DXY hasn't even broken out of its bull flag. So this is a little bit of an interesting observation that I'm making, that since gold has broken out of its bear flag, and you often see the dollar and gold move inversely, it clearly has off of this pattern. Since gold has broken its bear flag, do we likely see the DXY soon break its bull flag to the upside? So these little nuances that we're kind of just paying attention to. Even if you look at the silver market, silver has been crushed as well, finding a little bit of support here, but it is making this falling wedge pattern. So maybe you get one more flush down into this retrace zone, this trend line over here around this, maybe a pierce of $21. That could be potentially a good buy for a swing trade bounce or a day trade. But nonetheless, the precious metals are certainly signaling things that the Nasdaq and the overall markets aren't. Even if you look at the QQQ, the QQQ is still approaching some resistance. You have a little bit of a gap fill up here. The importance is that Apple actually filled a gap intraday today. If we flip to the 10-minute chart, let me just turn off these indicators. We can see that intraday Apple needed to fill a technical gap, which was on, I believe it was on the hourly chart here, right over here, and we filled that basically over here. And now you still haven't really confirmed above that. You are trading inside of this little bit of a weekly or an hourly doji on the intraday, but we'll have to see what type of price action happens with Apple, because it's likely going to obviously dictate where this Nasdaq QQQ goes. Let's touch base on oil. U.S. oil saw a nice little reversal closing back above support. So short term, that is bullish. Notice this little bit of an inside bar kind of bull flag forming with nice little bit of tails showing that there are buyers buying this back up. So short term positive, you could potentially favor some upside for oil, but you're at this inflection point in the coming days. Notice how, like many stocks, are at resistance lines heading into options X. It's just how the market makers like to potentially move things and draw that max pain level. But in terms of natural gas, looking at the other energy play, natural gas did see some sell side pressure, but believe it or not, that's actually a positive inside day. You didn't take out the low from yesterday. Let's look at it on an intraday chart. It's very, very volatile still. Like I said, it's going to be a very choppy price action for natural gas to really contain its rally and hold it. If we flip on the hourly chart, we just have this little bit of a wedge pattern that is transpiring here. You can see that that trend line connects there to this trend line over here. You even have another little upsloping one here, your minor wedge. This would be your major wedge at the bottom channel. This would be your minor wedge. So again, you're coming up to some near-term support, but natural gas is looking weak. You could not close above, actually, I believe that was the level. Notice how this was your breakout basically yesterday, closed above it, but you could not hold it, and you've now just basically fallen back down to the low end of the range. But still positive price action. Natural gas is slowly trying to build a base higher. We really need to get a daily close above this little bit of a wedge pattern here before we can see it move higher. So notice how we peaked through yesterday but couldn't confirm and close, so we're likely going to head back to the low end of the range. But again, we're slowly building potentially a little bit of a base here. I'm still more on the optimistic side that we can see a move up in natural gas in the near term. There were a few earnings after the bell. Obviously, crypto also popped. We had many stocks pop, like Cisco after the bell. Zillow Group was up. Roku had a nice move. Twilio had a nice move. A couple of the stocks that were down were like Shopify. So let's just take a look at Shop. Shop is seeing some sell side pressure on their earnings, but if I flip to the intraday chart here, basically Shop is trading down to $49.95 in the after hour session. So definitely a move down in Shop. You also have FSLY, which this stock has been so extended naturally into this bear flag channel resistance, and it is trading down in the after hours. Cisco has been a nice little mover. Cisco's actually was trading at resistance, but it busted through that, and it's currently up in the after hours it's pulled off the high substantially. It's up 4%, but it did wick up all the way over 10% in the after hours. It was a crazy move. So it wicked all the way up to this trend line. Notice how this trend line was your resistance, major pivot breakdown. You've now completed a retrace. If we get a retrace on Cisco, that's a nice short setup for sure. Absolutely, it will be. Other than that, there were a couple other ones that reported after the bell, like let me just go through SNPS. SNPS is another major ticker. But nonetheless, it was kind of a net positive session after the bell for the markets. SNPS is down in the after hours as well. naturally, when you're trading up at this wedge pattern, you do expect the bullish trend to potentially resume and arguably touch the upper end of the range. But with potentially a weaker earnings over here, it is trading down to 365. It makes it likely that this is maybe the cycle top in this initial move, at least until you retrace back down to your next big support level, probably around 340 here, give or take. Other than that, there will be some trade setups tomorrow, so we'll be day trading in the morning session. Basically, there's a lot of earnings that have come out, so we'll obviously have to be paying attention to some of the key levels here. But other than that, things are certainly interesting as we head into the price action of options X on Friday. Again, there's a lot of mixed signals in this market. There's signals from stocks, there's signals from bonds, there's signals from yields, there's signals from the precious metals, there's signals from energy, and we're just trying to make sense of it all. But it is a very, very confusing time at this point in time. However, I generally like to take the signals from the most liquid markets. And right now, those most liquid markets are signaling that we are likely on the verge of a turn in the market on the major indices to the downside, especially if we get a continuation move to the upside on this DXY. And the fact that you had the long end yields break out today, that certainly confirms things in my mind, and we should see negative price action. But markets can stay irrational for a little bit longer than we expect, and we just have to obviously trade what's in front of us. But I do think that it's very risky buying assets up here because of what the bond market and yield market is signaling. Other than that, please like this video, hit the subscribe button if you don't follow us. You can find additional information on our trading website. Stay tuned for additional live streams and a lot of market action and data. We obviously have some important data tomorrow. The PPI comes out, and I do believe there's a little bit of other economic data. Let me just flip to my calendar for tomorrow. So yeah, PPI at 8:30 and the building permits. So two big moving data components that could spike yields even more, that could spike the dollar. And based off of all the data we have been receiving, it is showing the economy is robust. So you would favor a continuation in strong data from the PPI, which could mean producer price inflation ticks up a little bit. Could also mean that if we get a higher reading on the PPI this month, that it could mean CPI is likely to uptick again next month. So these are little nuances and things you have to be aware of that the market is still very sensitive to, but it seems that stocks are just chugging along in a mind of their own, but that generally happens until they don't. I mean, notice how we're still trading inside of this wide range red bar. We haven't really confirmed on a weekly basis above it. Notice how you're also trading inside of this wide range red bar hard sell-off, and it's been like 1, 2, 3, 4 days of price action, just still chopping inside of it. So the markets are really stale. I think they're tired, even though this kind of looks bullish, just based off of the volume trends and what other markets are signaling. I think the S&P is running out of steam here and looking very tired. Perhaps we get one more blow off top, but perhaps we're waiting for NVIDIA earnings, which are around the corner next week. But time will tell. I do think we're at an inflection point here. We're going to get a big move one way or another. I definitely see probably at least a 2% general direction move sometime occurring now until Friday. So I do think we're going to get that trend directional move very, very soon here. Other than that, stay tuned for more analysis. We will continue to be posting. Take care, everybody, and enjoy the rest of your evening.